Hello everyone and welcome back to the channel. Today, we're diving deep into a stock that's caught our attention on the hard-to-borrow screener, CCTG International Holdings Limited, trading under the ticker CCTG. This company, operating in the industrial sector, specifically electrical equipment and parts, is showing some incredibly interesting signals that warrant a closer look. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. CCTG International Holdings Limited is a company focused on designing, manufacturing, and selling interconnect products across Europe, Asia, and the Americas. Think of essential components that connect electrical and electronic systems. With a market capitalization of just $3.06 million, CCTG is a microcap stock, which often means higher volatility and lower liquidity compared to larger companies. Looking at the recent price action for CCTG, the stock has been moving significantly. Today alone, it's up a remarkable 28.53%. Over the last 5 trading days, CCTG has climbed 16.82%, and extending that out to the last 30 days, we've seen a gain of 54.24%. Chart, CCTG daily chart, highlight recent price action. This strong upward momentum is also accompanied by a surge in trading activity. Today's volume stands at 25,797,700 shares, which is a substantial increase compared to its 30-day average volume of 10,862,816 shares, giving us a relative volume of 2.4 times the average. This tells us there's significantly heightened interest in CCTG right now. What is cost to borrow and why it matters? So, why did CCTG appear on our hard-to-borrow screener? To understand that, we need to talk about what cost to borrow is and why it's so important. When someone wants to short sell a stock, they first need to borrow shares from a broker. The cost to borrow, or CTB, is the annualized interest rate short sellers pay to borrow those shares. It's essentially a rental fee. When a stock becomes hard to borrow, it means there's high demand from short sellers to borrow shares, but very few shares available to lend. This scarcity drives up the cost to borrow fee, sometimes to incredibly high levels, well over 100% annually, like we're seeing with CCTG. Why can it exceed 100%? Because it's an annualized rate. If a stock is in high demand to short for just a few days or weeks, that daily fee, when projected for an entire year, can become astronomical. A high CTB indicates that maintaining a short position is becoming very expensive, which can put pressure on short sellers. Why this stock is hard to borrow right now? Now, let's get specific with CCTG International Holdings Limited. CCTG currently has an annualized cost to borrow fee of an astonishing 678.2%. Highlight 678.2%. While this fee has seen a slight dip of 28 percentage points over the last 5 trading days, it remained extraordinarily high. This tells us it's extremely expensive to short CCTG. Adding to this scarcity, there are currently only 10,000 shares available to borrow. Highlight 10,000 shares when you consider CCTG's estimated float is around 3.0 million shares. Having only 10,000 available to borrow represents a tiny fraction, emphasizing just how tight the supply is for short sellers. Our internal composite squeeze score for CCTG, which takes into account factors like CTB level, CTB momentum, shrinking borrower supply, float size, volume/price momentum, and technical setup, comes in at 45.1. This indicates a moderate potential for a squeeze, suggesting there are indeed some intriguing dynamics at play, but it's not an extreme signal. Squeeze mechanics explained. So, what does it all mean for a potential short squeeze? A short squeeze occurs when the price of a stock rises sharply, forcing short sellers, who have bet on a price decline, to buy back shares to limit their losses or avoid ever-increasing borrow fees. This buying activity further pushes up the stock's price, creating a feedback loop where more short sellers are forced to cover, amplifying the rally. When a stock like CCTG has a very high cost to borrow and very few shares available to short, coupled with rising price momentum, it puts significant pressure on existing short positions. They might be forced to buy back shares just to get out of an unprofitable and increasingly expensive trade. However, it's crucial to understand the high cost to borrow. Even CCTG's 678.2% does not guarantee a squeeze. It can also signal that short sellers have strong conviction in their bearish thesis and are willing to pay a premium to maintain their positions, believing the stock will eventually decline. Dilution risk check. One critical factor to assess when considering any potential squeeze play is dilution risk. Dilution happens when a company issues new shares, increasing the total share count and potentially diluting the value of existing shares. Even if cost to borrow is sky high, significant dilution can flood the market with new shares, offsetting or even completely negating any potential short squeeze. For CCTG, our diligent scan found no recent dilutive SEC filings such as SMINUS-1, SMINUS-3, or 424B forms in the last 90 days. This absence of recent dilution is a positive factor for a potential squeeze scenario. Similarly, we found no recent reverse split for CCTG in our look-back window, which can sometimes artificially inflate share price without a corresponding increase in market value. Before we continue, let's reiterate our important disclaimer. This video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. For CCTG, given these dynamics, what should you be watching for? Continue to monitor the cost to borrow rates and the number of shares available to borrow. A further decrease in available shares or an increase in the CTB fee would intensify the pressure on shorts. Keep an eye on trading volume. Sustained high relative volume suggests continued interest. Of course, watch CCTG's price action. Maintaining its upward momentum would be key. Any news or corporate developments from CCTG Technology International Holdings Limited itself could also play a significant role. In summary, CCTG Technology International Holdings Limited (CCTG) presents a fascinating case study in the hard-to-borrow landscape. With an incredibly high cost to borrow of 678.2%, a very limited supply of just 10,000 shares available to borrow, and significant recent price and volume momentum, CCTG has certainly caught our attention. The absence of recent dilution or reverse splits is also a notable point. Remember, high cost to borrow means risk for short sellers, but it doesn't guarantee a squeeze. It's a complex interplay of supply, demand, and market sentiment. Always approach these situations with caution and thorough research. If you found this breakdown of CCTG helpful, please hit that like button, subscribe for more in-depth analyses, and let us know your thoughts or any questions you have about CCTG or hard to borrow stocks in the comments below.